Good afternoon, everybody. Welcome to ActivTrades Monday Market Matters webinar for the 24th of June 2024. It's Paul here. I hope you're well. I hope you can see the slides, and I hope that you can hear my voice as we join me today to talk about trading the 4-hour trends, 4-hour real charts in general. Lots of interesting stuff that we can talk about there. And yeah, as I said, if you can just confirm in the chat box that you can hear my voice, that you can see the slides, that would be really appreciative to know that the technology is working with us rather than fighting us. Super, that's great. Much appreciated. Much appreciated. What are we going to talk about today? What are we going to focus on? Well, as always, we'll talk a little bit about Monday Market Matters, and in particular, the news that's coming out for the week ahead. And then we'll have a chat about 4-hour charts, really. Okay, in terms of what you need to be aware of. Okay, what can I share with you in terms of my own experiences? We'll talk about what are the pros and cons of trading the 4-hour chart, and what are good strategies for the 4-hour chart. And we'll there's a lot for us to cover here today. So what you'll see is we will do a kind of like an intro piece here, and then over the next few months there will be additional sessions on the 4 hours with specific tactics, etc., that I will happily share with you. But there's plenty for you to take away today in terms of understanding how to operate with them, and actually how they can work for you. And then, as always, we'll have a check on the live markets, all right, as we go into the opening of the US session. So Simon says use the 4-hour for sort of moving averages and chart analysis. Okay, that's great. That's good to know. That's great. David says I use the 4-hour chart for analysis on the higher time frame. That's great. That's excellent to know. And it's always good to have people here can share their experiences. Okay, their insights. It's always beneficial. We can all learn. Okay, you never finish that learning journey as a trader. So. For those of you who are joining us for the first time or are new to Monday Market Matters, it is ActivTrades' regular webinar series with the aim being to help traders start the week in the right frame, in the right place, as we prepare for the opening of the US markets in about 24 minutes. So every Monday, 2 o'clock London time, we cover the news, taking a look at what's the major news to be aware of for the week ahead. Do the main piece on education in terms of some element here that can build your trading knowledge, like today talking about 4-hour charts. We'll always have a little look at the ActivTrades platforms and tools that you have access to as a client, and then we finish off with a look at the live markets, okay, at the start of the US session. So there is always plenty for us to look at. There's always lots for us to cover. So let's crack on. And as I said, if you have questions or comments, please feel free. Okay, I don't mind them at all. We can have a conversation if we can try and I will help where and if I can, and and if it's relevant to what we're discussing today. So let's have a talk about the news. And I say this every week without any apology. If you're new to trading, I don't expect you to be able to analyze, the in-depth nuances of economic analysis releases, but it is important for you to know when that news is coming out. Okay, it's very important because it will invariably induce volatility into the market, and volatility is a double-edged sword. Okay, when you're on the right side of it, it's fabulous. When you're on the wrong side of it, that can be challenging. Okay, so you can find out where the economic releases come out on a economic calendar. There is one available to you on the ActivTrades website and elsewhere on the internet. So there's no excuse not to actually know when the news data is coming out for that session ahead, for that day, for that week. It really is crucially important to understand that, so that you can plan accordingly. So we've had a couple of busy weeks news-wise. This week is a little bit of a quieter week as we run towards the end of the month, the end of the quarter. It's also the end of the first half of the year. Okay, so it kind of makes it an interesting time and point. Also, for those of us who are in the UK or in Europe, we're now getting into a couple of weeks where it's going to be rather interesting, shall we say the least, because this weekend we will have the French elections after President Macron called them after the recent European election results, and then next Thursday, the week Thursday is the UK elections. Okay, so They will have an impact on sterling and euro, and also, some of the European indices, and also the FTSE in the UK. So, as I said, we might not have as much economic data coming out this week as in the other weeks because it's the end of the month, but there are still things going on that you should be aware of, okay, and you need to sort of, factor into your plan. So, what really kind of looking for this particular week here is, what's interesting is to see tomorrow we have the Australian consumer confidences, but also the Canadian inflation rate. Okay, we've got Australian Canadian inflation rate, and we'll also see some of the US dollar, some of the consumer confidence there. On Wednesday, we've got German consumer confidence, but we'll also have Australian CPI data coming out there. That'll come out, what will be overnight to ourselves. Thursday starts to get a little bit interesting, where here in the UK we've got the Governor of the Bank of England, Mr. Bailey. He's been speaking, and people will be interested to hear what he's got to say about the state of the economy and the trajectory of UK interest rates. As you can also see there, we've got American durable goods orders, we've got American GDP, GDP data there, and also the pending home sales will be out there. And then on Friday, we've got Canadian GDP there. We also have the US, they have their core PCE price index details, which is the kind of preferred indicator of Mr. Powell and the Federal Reserve to effectively, that's what guides them in terms of their decisions regarding the trajectory of American interest rates. And whilst most people recognise that the likely trajectory is to interest rate cuts, invariably a lot of that will be depending upon the data just confirming that, and so traders will be interested in seeing that this coming Friday. So, not as busy week as the last few weeks, but there's still, as I said, there's still data coming out, and you need to be aware of it. And as I said, also just remember we have French elections on Sunday. I think it's the 30th of June, and the UK elections on the following Thursday, the 4th of July. So, yeah, lots to be going on with it, and it's just always important to know what the score is. Now, having chat about what the news ahead, let's talk about our education piece for today. And today what we're talking about is really how to trade 4-hour charts, okay? I'm particularly looking at trends, but I think we have the scope to basically set the scene regarding trading 4-hour charts and what's required to be able to do that successfully. As the slide says, many traders want and try to trade very short time frames in financial markets. However, the reality is that for many new traders, their present skill set and also their lifestyle and schedules prevent them from doing it successfully and sustainably. And what actually might be more suitable for new traders is to trade longer term charts. And in particular, we can start with the 4-hour chart, which is what we'll look at today. So today, I'll talk about the pros and cons of trading 4-hour markets, and we'll look at, in particular, FX markets and how you can engage successfully with them. And as I said a few slides ago, we're going to today talk a little bit about, as I said, trading 4-hour charts, and in particular, we'll look at FX markets. But what I'll do is over the summer period, when we've got other sessions, I'll put in a session about 4-hour charts for indices and commodities. I'll put in a session about specific 4-hour trend trading and reversal trading pieces, so that you can start to build up a little bit of knowledge and experience and understanding of what's required when it comes to trading the 4-hour charts, which 4-hour charts are available across all of the ActivTrades platforms, so MT4, MT5, ActivTrader, TradingView, etc. We all have that. So regardless of which platform you particularly prefer to use to engage with markets, you'll be able to do so through this particular session. In terms of personal disclosure, I love trading the 4-hour charts. Always have them. Always had a soft spot for them, and I have used them as part of my longer term swing trading. In particular, liking the kind of relationship between weekly charts and 4-hour charts. But then also, I use them as part of my intraday trading as well, in terms of the kind of relationship between, let's say, the 4-hour trend and then 30-minute, 15-minute, 5-minute entries. Okay, so 4-hour charts are they are the kind of absolute absolute sweet spot, okay, for both swing trading and intraday trading, and they can be built into both type of plans. Today we're going to talk more about it, in terms of the sort of, let's say, the swing trading element, okay, and in terms of how to and particular trends, but also just other patterns, okay, to give you an idea and insight. But as I said, there's lots of reasons why I particularly love trading 4-hour chart. So invariably, one of them is less times at the screens. Once you know when those 4-hour candles are completing and when a new candle's beginning, that gives the opportunity to basically to plan your life around that, okay? And even if you are not a full-time trader, okay, even if you're, let's say, a part-time trader trading around, a job or running a business, running a family, caring for family, etc., it makes it easier for you to sort of manage small blocks of time in your day to be able to do that, rather than having to be sat there from 7 in the morning till 10 o'clock at night, which I have done when I've worked at hedge funds, etc. Right, so the 4-hour market allows you to have less time at screen, so you can manage it, as I said, around your other schedules. And I would also say, okay, from personal experience, it is easier to choose quality over quantity. And what I'm particularly meaning about that is that, once I have a small time window I know to look at, and once I've done my analysis and I've focused in on what particular instruments I want to look at, well, then when that small time window appears around the end of a 4-hour candle and the start of a new one, I can very quickly identify, what is my quality setups, and look to focus on them, and very often, just ignore sort of, the noise, the chop, indecisive markets, etc. And I think sometimes that helps new traders in the sense that, rather than being just overwhelmed from sitting there in front of the charts all day, hour after hour, just having a small time and focuses you to understand and improve your recognition of what makes for a good trade setup for you, okay, for you. It also says, time to prepare for a trade. So it is very rare that you will just get on one 4-hour candle just a trigger out of nowhere. What you will find is that you will have opportunity every 4 hours to do your analysis and to basically get an understanding of the narrative, the underpinning narrative in that market, and then it allows you almost to sort of set up and prepare for where the trade is most likely to occur. And that is, I think, a great place for traders to be, namely that you are ahead of the curve and you are planning your trades, rather than many times when I see traders trading, 5-minute charts, 1-minute charts, they're constantly reacting to the market, okay? And because they're reacting to the market, the likelihood of them making impulsive knee-jerk decisions, that rises up. 4-hour chart, you can take your time to prepare, okay? You can see where it's going to happen and you can get yourself ready for that. They're also easier to identify, cleaner setups, okay? And I'm a very big proponent of trader. When you're looking at your charts, good trades leap off the chart at you. In the same way you hear me talking about how good trends leap off the chart, good trades leap off the chart, okay? You don't have to force it. If you are forcing it, the reality is you're probably not doing it right, okay? One of the other good things, and particularly what I like, is you have the opportunity to generate good risk to reward, okay? Good asymmetric reward to risk. It's very doable, okay? It's very feasible to have good swing trades off the 4-hour chart where you could be risking anywhere, let's say, between 40 to 80 pips, with the opportunity to make somewhere between 150 to 250 to 300 pips, depending upon the setup and the sort of the narrative of the market and the context. But it does allow you the opportunity to set some really good risk to reward trades, which I'm all in favor of. And finally, which kind of links into the first point, is that it is easier to engage in set and forget trading. If you've been doing your analysis, if you've been preparing for your trade ahead of the curve, all right, actually just looking at the sort of the levels and the price action and understanding where you're in a position to do your trade. That allows you to almost, as I say, set and forget your trading, to set your order on, let the market take it in, set your target, set your stop loss, and then almost forget about it, almost walk away from the trade. And once again, this can be very helpful to some new traders, because quite often some new traders, they like to tinker with their trades. Okay, they can't sit still. They need to sit on their hands and let the trade play out, and they can't. They're impatient. They want to tinker, they want to basically amend their trades, etc. And actually sometimes just being able to set and forget, take you 20 minutes around the candle close and open, work out your trade, okay, work out your entry, work out your stop loss, your target, your position sizing, etc. Get the trade on your platform, and then literally walk away and leave it. Okay, and actually for many traders, for many new traders, that is actually probably the best way for you to operate. All right, that's it. But it allows you the opportunity to do that, and once again, that allows you to work around things like maybe a job, maybe you're running a business, maybe you're raising a family, maybe you're looking after family members, etc. It allows you to do that, and I think that's something that shouldn't be underestimated. I think that's a real benefit, all right, that can really help a lot of traders. Okay, and it's something I see in my own one-to-one work with traders. There's lots of traders quite happily working on that 4-hour chart, because it allows them to operate, okay, regardless of what else is going on in their lives. So it'd be interesting to know, there's a couple of people there who said, they use the 4-hour charts. It'd be interesting to know what benefits they have found. Has there been anything different from what I've just talked about there, or is it what drove them to the 4-hour charts? Okay, is it a case of that those elements, or was it something individual? Okay, as I said, it's always good to hear other people's understanding. It's good to hear other people's experiences. Okay. Everybody can learn from everybody as a trader. Okay, it doesn't matter whether you've been trading for 2 weeks or 2 decades. You can always learn from somebody, right? And having that openness and that curiosity to learn from others is a great trait as a trader. So there you go. Hopefully that's given you some insight there and a little bit of ideas in terms of why I love trading those charts. So Simon says, 4-hour allows me to create good support and resistance levels so that I know at what price the market is likely to react in a notable way. That's excellent, Simon. All right, that's an excellent way to use 4-hour charts. Okay, and you're absolutely right. Okay, understanding those significant levels is important to you, and it helps you get ahead. All right, get ahead of the curve and be ready. Waiting to actually take your trade if the price does the right thing at the right time and level for you, rather than be constantly reacting. Okay, the constantly reacting never really works well. Okay, you might get lucky once or twice, but that is not really the way that we like to really generally operate. So yeah, thank you for that, Sam. Good point. So just a little bit of logistics. So points to be aware of: the 4-hour candlesticks on the ActivTrades, MT4 and MT5. What you will see is that they're at midnight, 0400, 0800, 1200, 1600, and 2000. Okay, so not unsurprisingly, there's 6 candles, 6 4-hour candles in a 24-hour period. Just be aware that just because of the nature of where the server settings are, the ActivTrades MT4 and MT5, that they're an hour behind what you see there. Okay, so when you see the 8 o'clock candle there, that is certainly for me, it's a 7 o'clock London candle. That's actually when it's starting. So I appreciate that we have a truly global audience who join us. So just be aware of how you have to make amends for that for wherever you are in the world. Okay, those candles will always close. You'll see, the 400, the 800. Okay, that just need to make sure take a little time to assess where that sits compared to where you are in the world. So just take a little bit of moment to work that out, write it down, and very quickly, you'll get into a rhythm of that. And really, and this is one of the other things, is that realistically, for me, at London, the 8 a.m. candle, the 12 o'clock candle, and the 1600 4 o'clock candle, and the 8 o'clock candle, okay, less. But those three main candles, the 8 o'clock, the 12 o'clock, and the 4 o'clock, which is 7 o'clock London, 1100, and 3 o'clock London. Those are my most main business. Sometimes, if I'm still at my desk, okay, then of course I will take a little look if I'm expecting something. But what it means is that realistically, you're only having to look at the charts 3 times a day, okay. And what I normally suggest is, just put it in your phone or on your alarm, just a 20-minute window around, when those candles are closing, when those candles are reopening, all right, when the new candle starts, because it's actually that's what we're looking for, okay. That's what we're just trying to understand. Has the candle closed, in a way that is giving us a trigger, in which case we need to be able to put our trade on, or if you're managing a trade, how is that? Only come back to it every 4 hours, so you can look at how is that trade played out, okay, over the intervening period. And as I said, and as it says there, it means our windows for trading, they're much smaller, okay, they're much smaller, and I think for many traders this can help, because you can get into a nice routine. Okay, you can get into a nice routine of, just as I said, putting a little 20-minute window around, when the candle's closed, when the candle opens, or just click, 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 working that way. If you're, as I said, if you're busy with, other life commitments. So just make a note of that, put that down, as I said, and amend the time towards where you're based. Okay, but that's what you're looking at. That's what the candles. And for me, UK is a UK-based candle. That's where that's what I have to recognise as that time, and I have to plan accordingly, which is absolutely fine. That works well for me. So with any kind of trading, okay, we've covered this plenty of times in previous sessions, is that any kind of price action trading plan should be quite simple and clear, right? And I always sort of share the most simple elements of it is having the right pre-trade routine. Okay, it doesn't matter whether you were trading 4-hour charts, or you're trading daily charts, or whether you're trading 5-minute charts or 1-minute charts. You should have yourself a nice routine beforehand that allows you to put yourself into the best place to be able to take the best trades. Okay, as I've said a little bit earlier, we want to be taking quality trades, not it's not about pumping out as many trades as you possibly can. It is about identifying quality setups. So even if you think you're trading on a 4-hour, or even if you're using the 4-hour chart for intraday levels of support resistance, still, okay, draw in significant levels on the monthly, weekly, and daily charts, okay, because you do not want to be buying into resistance. You don't want to be selling into support, so you want to at least know where they are. You want to be identifying, is that market, is it trending or is it range bound? You hear me say it every week, okay? Good trends leap off the chart here. If you need to force it, it probably isn't a trend. Okay, good trends leap off the chart here. Remember, we all love good trends, but markets only tend to trend 20 to 30% of the time. The rest of the time, they're either transitioning, into or out of a trend, or they're just consolidating and range bound. And that's okay. Okay, if you're looking at charts and you can't find a good trend to trade, that is okay. Good trends leap off the chart here, right? Don't force it. No need to. It's only then start to look at dropping down to things like the 4-hour chart, okay? And I'm going to go into, as I said, we'll go into more details and specific tactics in some future sessions we can focus on, but as a general, let's say, big picture overlay, you want to drop down to your 4-hour chart. You want to be looking for specific price action triggers, which we'll have a talk about in a particular moment. When entering, okay, a trade at the start of your trading career, be sure to wait for a break of the candle. What does that mean? I'll show you on a chart, on the live chart in a bit, but very often sometimes traders get a little bit excited, okay? They get a little bit ahead of themselves. They think that it is a pin bar or an engulfing candle setting up, and they think they're being a smart aleck by trying to get ahead of the crowd and put the trade on, when in fact, actually, you need to wait for that 4-hour candle to close and to confirm what it is. Confirm that it's giving you a trigger, so that when you're waiting to take the trade or put it up there, make sure you're waiting for it for the break of the candle. For the break of the high of the candle if you're going long, or break of the low of the candle if you're going short. As a general rule, stop loss never trade without stop loss, and your stop loss should be on the other side of the candle or the pattern. Maybe it's a one candle trigger like a pin bar and engulfing candle. Maybe it's a pattern like a double top or a double bottom or head and shoulders, etc. Generally, okay, as a rule of thumb, tell people no more than risk than 1% per trade, and understand how to position size accordingly. If you don't know what that is, have a look on the ActivTrades webinar archive, because you'll find plenty of that. You will also see that ActivTrades also has a YouTube channel there, and you can follow these sessions. They're also placed upon there, and you'll find there's quite a huge archive on there. I always say, as a general rule of thumb, you want an asymmetric reward to risk of at least 2 to 1, okay, or to trade to the next significant level, and then really record your trades, review your trades, repeat your best trades. That's the business of trading. All right, that's the business of trading. Having a good routine, following it, making sure you're recording your trade, make sure you're reviewing your trades, so that you can repeat the good ones, and then you can cut out the sloppy, impulsive trades, okay, which you're going to take. Everybody does now and then. You're a human, but the quicker you can identify which are your sloppy trades, the better you will be at cutting them out. And even just that job of cutting them out is the sort of thing that helps your kind of trading start, the trajectory of your trading start to point in the right direction, and that's what we're looking to do. So, once again, it'd be good to know, those traders here joining us today who are, engaged in the markets. Do you have yourself a very simple routine that you can follow? And maybe you've got a very complex routine. That's each to their own. But regardless of whether you're trading 4-hour charts, 5-minute charts, monthly charts, it is important to have a simple routine to start with, ladies and gentlemen. That's the sort of thing that just helps just get you into a routine, just get you into your groove, okay, and find you taking good trades rather than just chasing opportunity. Simon says, I like to analyze in a complex way to trade in a simple way. Well, fair play, fair play. At least you know that and understand that, it's good you can work with that. So when we start to look at, well, actually, come on, how can we trade 4-hour charts? What are the sort of things that we need to be looking at and understanding? It's a case of that. Jana's asking, dear Paul, will you be showing live charts? Yes, yeah, we do. So once we do is I'll go through these slides, and then we'll switch across, have a quick look at how the American markets are setting up, and then we'll also have a little look at some of the 4-hour charts as well. So you get a bit of a double bubble on that. So thanks for the question. So what are the kind of tools we can use when trading 4-hour charts, especially if we're using price action? Well, we have covered awful lots of education material in these sessions, okay, and they're all there, they're all available for people to look at and talk about. And I do realize that people will trade in different ways, and and I'm encouraged that you have to find the way that works for you. And we have talked about in the past things like trendline breaks and bounces. Trendline bounces in particular, one of my favorite, and I'll show you a few of them in a couple of slides time. We're looking at breaks of support or resistance. This is especially, some people like to trade breakouts, okay, breakouts of consolidations. That's absolutely fine, okay, and we'll have a little look at that. Some people like to trade continuation patterns, things like a flag pattern, which is really, or a pennant pattern, which is very good on a 4-hour chart, or even things like reversal patterns, double tops, triple tops, double bottoms, etc., head and shoulders, inverse head and shoulders. More on terms of bounces, moving average bounces, I'll show you a couple there. They're one of the ones that I particularly like to utilize myself. And then also just even simple price action at candlestick elements themselves. So, for example, pin bars, engulfing candles, star formations, key reversals, very simple price action candlesticks. Okay, and so and you can find sessions on them, on the webinar archive, and especially when you start to basically combine price action candlesticks, okay, with trend line breaks and bounces, and the ability to basically buy pullbacks and sell rallies and trends. That is a very simple, easy way to operate within the, let's say, the 4-hour market domain. You will also, of course, have news announcements. Personally, this is my view, okay? I don't like to trade in front of news announcements. Some traders love to, and that's absolutely fine. Personally, even with the 4-hour chart, I'd prefer to sort of effectively let the news come out, and then see what the next 4-hour candle does, and then operate from that way. Okay, so I know some people love to trade the kind of the aggressiveness of news announcements, but you can still even trade them with 4-hour charts, as long as you know when the news is coming out, and look at how the 4-hour candle that trades around that news and after it, how that completes, because that itself can be a useful trade trigger. So there's lots there. Okay, lots of different ways, and as I said, I'll do some separate sessions, okay, over the summer and into the autumn about 4-hour trends, okay, 4-hour reversals, indices and commodities as opposed to FX, etc. There's lots of little bits of nuance, and I actually help on them. So Simon says, I trade news announcements on big deviations, but never into a news announcement, just following it. Yeah, there are some people who trade into news, and they do that very well. I am not one of those traders, okay, and part of trading well is knowing what type of trader you are and operating to your strengths and mitigating your weaknesses. Okay, so each their own, but you can still do it. The 4-hour charts can still be very useful around news trading, and we'll cover that maybe in a future session. So let's have a look at some particular kind of trades and setups and why we like these 4-hour charts. Excuse me. So it's a warm day today. This is Euro Aussie 4-hour chart again, and today we'll look at mostly FX. Okay, but as I said, I'll do sessions on a specific indices and commodities and different types of tactics. Remember what I was saying is that ideally, just identify what market environment is in there. When I see price like it here wound up with the moving averages, okay, that is invariably, that's not really my particular place to trade. What I like to see is prices break out of that, overextend, and then move back into the range. Okay, both and that's what was happening here on this Euro Aussie chart, is that I had drawn in other significant levels of support and resistance, and actually once price broke out of that consolidation, maybe you can see here what we actually had here on the 4-hour chart is we had a double bottom. Some people might even say it was an inverse head and shoulders, depending upon your definition, but I liked it as a double bottom. Not only was it a double bottom, but we had a double pin bar, double rejection, okay, of this particular level, and that was the trade setup, okay. And the trade setup looking at the other previous level of resistance, and actually, as you can see, price coiled up there, and then price ran its way, and it ran its way all the way up to the previous level, and then here what we had was actually price print. This is an evening star formation. If you don't know what a star formation is, so you can find that on the webinar archive. And once again, price sort of drifted back in towards that, towards this range, and then before it actually reversed and carried on. So let me draw some of the. I didn't capture. Here we go. Let's clear these out, just make it a little bit clearer for us. I didn't capture this, but there will be people who would have looked at this as effectively as a bull flag. Okay, a bull flag in an uptrend, and then been looking to sort of trade with that. That was not for me. My kind of trade is here. Okay, I like to sort of to let price push out to particular levels and see how the price action at significant levels of support or resistance, how it plays out, and use that as my kind of way to particularly to take a trade, to basically identify a trade setup. And the thing is, this is a 4-hour chart of Aussie, but actually that's just solid price action trading. And that could be a 1-minute chart, it could be a 1-month chart. Okay, once you start to identify and start to see these happening up and how the price reacts to these particular levels, and combining confluence of events of significant levels, price action patterns, it starts to give you the opportunity to take some really simple solid trades, okay, that offer you, as I said, those kind of good levels of reward to resistance. Now what we also want to see, as I said, is identifying trends and trying to trade trends. As I said earlier, good trends leap off the chart at you. Okay, you shouldn't be fighting yourself. Okay, if you are fighting, well then invariably that that it's probably not a trend. I'm hoping that everyone here can see that this was a very clear trend. Okay, this is euro dollar on the 4-hour chart. Price is making high highs, high lows. Remember, price never moves in a straight line, but also price was respecting. I have on all my charts, you'll see I've got a blue 20 period moving average, a red 50, and a green 200. And invariably you can see price here at the start is coiled up. Okay, it's coiled up with the moving averages. Okay, it's not really giving us anything to get excited about. It's just working its way. But then what starts to happen is we get the 20 above the 50, above the 200, and we start making higher highs. Okay, and we pull backs, and we're making higher highs and lower highs. And I personally, some people love to buy the breakouts. I love to personally I much prefer buying pullbacks. That's my style. I like to sort of see price break a level and then pull back. And here you can probably see maybe price had pulled back to the 50 period moving average. It was clearly starting off its trend. And what I was looking at, that was a bullish pin. That was a bullish key reversal. You rarely get a bullish key reversal in a trend, okay, as a trend pullback. It's rare. It doesn't happen anywhere near as often as you'd like, but it's a bullish pin bar, it's a bullish engulfing candle, it's a bullish key reversal, and then we were able to basically to move away. And then actually, depending upon how aggressive you are, depends upon whether you're looking to ride the trade, okay, it actually becomes a bull flag, and then invariably ride that. Okay, now as I said, we'll go into in future sessions managing 4-hour trades, okay, in terms of what are the good ways to be able to do that, and I'll share some details. At the moment, what I just want you to be able to recognize is that when a good trend starts, there will be multiple opportunities for you to take a piece of it. Okay, that is a fabulous, wonderful thing. As I said, it never happens as much as you like, or as much as you want, but actually being able to sort of take that and work with it is a great thing. And I have models that help me identify the strength and weakness within the FX markets. So what I want to be doing is trading strength over weakness, and invariably what happens is that kind of gives me more confidence when I see good trends like this start to take off, what I'm particularly looking for. And really, let me just clear some of this down, is that what we're looking at is ways is that once you're into a strong trend, okay, you will find there are plenty of plenty of ways to sort of to get on board, okay, to take that piece of that trend just even using rejection candles, okay, and that's probably a bit more advanced in terms of really milking the trend, and we'll do a piece on that. But when a good trend occurs, you want to be in a position to make the most of it. But as I said, we don't always get the trends we want, okay. But then even on a 4-hour chart, you start to be able to recognize and understand the context. Here, pound against Swiss franc, we had been in a downtrend, okay, in a downtrend until we started to put in this inverse head and shoulders here, okay. So some people might recognize that, some people might not have. Then actually once we see the kind of the breakout of it, price launched its way back up, and it's no surprise to see that it came back up to this area. But then actually what we saw over the next few weeks was price just grinding. Price was just grinding in a channel. Not terribly exciting, just grinding in a channel. But the point to take away is that even when a 4-hour chart is grinding in a channel, there are still swings. Okay, there are still swings within that provide you with opportunity. Okay, there are ways to be able to operate. On the 1-hour chart or the daily chart, you might not be able to see that or take a piece of it, but on 4-hour charts, even a channel can be sort of a trending channel, and you're looking at identifying how to work that. And part of that is just simple, consistent price analysis. Okay, not looking to try and be not looking to try and be a rock star, not looking to try and be a hero, just every 4 hours, just updating your analysis, okay, on the particular instruments you're interested in, all right, and I'm working with them rather than fighting them. Sometimes there'll be nothing to do, and that's fine, all right, that's absolutely fine. We're not too worried about that. But yeah, Euro yen. What I wanted to put up this from this trade and the chart was that understanding when price is in a lovely trend and rejecting, sometimes price needs to pull back deeper, okay, even though I like to see, like here, so excuse me, let's just draw that in better. Apologies, I'm a better trader than I am an artist, ladies and gentlemen. That's what I always say. Here we go. If we are in a nice trend channel, here, okay, where you're getting pullback rejections off the 20, that's what you're actually looking for. But just to realize that sometimes price has to pull back deeper, okay, and there can be a whole host of context of reasons for that, why that might be. Maybe it's market makers or dealers playing silly games. Maybe there's just a big commercial business who's just effectively has to to put an order into the market, okay. There can be a multitude of reasons, okay. It's so when you see sometimes a pullback goes deeper than you were hoping or expecting, that doesn't mean you're a bad trader. That doesn't mean you've missed it, okay. That can just happen, and that can happen on both sides in terms of you can still be part of the trend here. There's rejection candles, pullbacks, but what I also say is, and it's one of the reasons I like moving averages. Moving averages are great in a good trend, but to be fair, everything is good in a good trend, okay. But what they do help me with is when I start to see the moving averages start to widen too far, and then here in this particular case, when I see price start to pull away, okay, when price starts to pull away from the averages, that is normally a good indication that we're getting towards the end of that trend. It's getting, the price is going parabolic. Once the price starts seeing the price going vertical like this, big candles, okay, and for me that is normally a sign that the kind of trend is coming to an end. And if I have been trading the trend, well then what I'm looking to do is to tighten up my stops, because I'm expecting it to pull back. And actually what we can see is that's what it did. It pulled back, and then we started to get now from a double top, we're now starting to get lower highs, okay. We've still got lows here, but actually now price is now going into a pennant, into a coil. So if you're in a trend and price pulls back really deeply, okay, maybe it shakes you out, that's okay. Doesn't mean you're a terrible trader. Doesn't mean you've missed, okay. Just sometimes price does need to pull back, but once you're back above the averages, that's normally a good indication that the trend is back in play. And on the other side, if you are in the trend and then the price, let's draw this, clear this in. If you are on the if you are in the trend, okay, and the trend starts to pull away from the averages, all right, or even if it's not the average, you just look, it's starting to go vertical. If you're in there, well then just nothing can defy gravity forever, okay, and expect that basically, especially once you start getting big candles like this, then invariably you're getting towards the end, okay. It's a blow off top we're getting towards, and if you're an experienced trader, that's there's a mean reversion trade in there, that for me, okay. But actually start to see how does it work, because it might be giving an indication that the kind of that overall trend is starting to run out of steam, and we're starting to get towards the edge of it, and as I said, no surprise, you start to see price start to coil up a little bit at the end of that trend, okay. Market starts to go into a transition period, all right. And so, as I said, just doing your analysis, working about it, not fighting it, but also just letting the market tell you what it wants to do, because it always will tell you what it wants to do. I think I put in a couple from recently, so kind of some of mine from the last week or two. Dollar yen 4-hour chart. Well, dollar's been strong, yen's been weak, okay, and as we've worked our way through, price is above the 20, it's above the 50, it's above the 200, it's trending nicely, it's giving a nice rejection candle pin. I did it again later in the week, okay, and just an opportunity to effectively join a trend. Now here was also an opportunity, okay, here was always an opportunity, but as a general rule, I don't really tend to open positions on a kind of a Friday. Right, on a Friday going into a Friday lunchtime, I don't generally open positions. Yes, I know it moved beautifully, all right, but woulda, coulda, shoulda. As a general rule, I don't really open positions late on a Friday after Friday lunchtime because I don't want to be priced to go sideways and for me to be caught carrying it over the weekend like that. But that's that's kind of what we look for. As I said, nice trend pullbacks, okay, nice trends pullbacks to moving averages to levels of support, and pulling that together. That's kind of that's the way to go. That's the way for us to operate. And euro dollar, okay. This was here, this gap here, that was the European elections. Price had already started to sell off into it, and then price moved its way down, and then price pulled back up to the 50, which is now sloping down, then put in a reversal position and a confirmation position, which allowed you to basically to trade the trend towards the rest of the week. Price then pulled back again. It printed counter trend lines, but then also once again it bounced off the 50 period moving average with a rejection candle before it moved down towards the end of the week. So that is, confluence events. That's understanding, the bigger fundamental picture in terms of what's going on in Europe. That's also just allying that up with, the change in the sort of technicals, okay, in terms of price starting to build its way down into a bearish trend, and then waiting for price to basically bounce off, in my case, kind of 50 period moving averages there, okay. Just being able to do that is just is a way to enact, okay, just getting on board a 4-hour chart. And I said, you're not trying to be a hero. You just let the market do its thing and then work with it to get on board a trend where you can. Okay, so before we switch across to the live markets, as always, just remember, Monday Market Matters is here to support you in 2024. So every Monday, 2 o'clock London time, cover news, education, active trade, tools and markets. It is going to be an interesting year in markets. I've been saying this all year. I think the second half of 2024 is going to be quite eventful. So I hope that you will join us to enjoy that journey. So trading 4-hour markets allows private traders to trade around their exciting lifestyles, and it means you require a small time window around the close and the open of those 4-hour candles. So you may only need to check charts a few times a day, but still use the monthly, weekly and daily to do your analysis to make sure you understand the big levels, and then you can use your 4-hour charts to execute your trade plan. And there are a wide range of trading setups that work well on the 4-hour chart. And so today is a kind of a big picture overlay, but we'll do in the future, we'll do attacking trends, and we'll do mean reversions as well in the 4-hour chart, and we'll do a piece on indices and commodities as well. Okay, so there's keep an eye out for those and the future sessions. And part of that is next week's session. Okay, just before we switch across, next week's session is about trading trend continuations. We've done an awful lot over the last first 6 weeks of different ways of trading trends. Okay, but what we'll also do is about trading trend continuations. Okay, once price is resuming its dominant trend, is there a way for us to get on board and take a piece of that? So I hope you'll join us for that. And as always, if you've got questions or comments, you can contact your account representative. You've got the number there, but equally, email english@activetrades.com if you've got any feedback or comments or thoughts that that you might have that we can do and such. So. So Jana says it was a very nice session. It was my first time here. Are there early recordings? Yes, Jana, you will find them. They are on the webinar archive on the ActivTrades website, and also on the ActivTrades channel on YouTube. You'll find them there. Okay, and thank you for the feedback. And we'll switch across to the live markets now. So if you just bear with me for a moment, and we'll switch across. So just bear with us one moment. Andrea says, how do I access the webinar archive? So if you go onto the ActivTrades website, you'll see education, go down to webinar, and then you'll see archive previous sessions. And if I have time, I'll quickly show you them as well there. Okay, so just bear with us one moment, and what we'll do is we'll switch across to the live markets. So today I've got the MT4 platform up, but sometimes we'll use the ActivTrader, sometimes we'll use MT5. Okay, but we'll have a little look here. So I have a profile here. I know those of you who've joined us many times, I have profiles for each of the major currencies that I trade, But one of the first ones I always look at is I look at the US dollar, and in particular have a look at the dollar index, because dollar is the big daddy of the FX market. If you can understand what it's doing, well, then it puts you in a place to trade all the other major currencies. Okay, so we don't want to, there's no point fighting the dollar. What we want to do is to find out, are there particular ways we can use that to help us. So let's just clear that and then have a quick look. So I have the dollar index chart here. Okay, let's just zoom in. As I said, I like to use the weekly and the 4-hourly together. What we've actually seen for the last few weeks is that we've had bullish weekly closes, and there has been a bit of strength there. Okay, in the dollar. Okay, and let's go into 4-hour chart. You can see that we start to play up. Then we had the would have been major move FOMC. And then we've worked around our way up on that. So I don't generally trade the dollar index itself. Okay, I tend to just use it as a tool to help me understand, how the majors, how the dollar pairs. But what you can see here on the 4-hour chart is the start of this week. We've had a nice high and a rejection candle there. We've sold off, the dollar sold off there magnificently there this morning, and that's why we're seeing here on the euro dollar. This is what we were looking at a couple of weeks ago. We had been in a downtrend there on the euro against the dollar, and then effectively what we've seen is that dollar sell-off has been coupled with a bit of euro strength there to start this week. And so I would have been interested around here, but what we can see is this candle. This candle at the moment is bullish up, but we've still got a little bit of time to go. All right, it's still got a little bit of time to for it to go, for it to work out and stuff. What I would have liked to have seen if that candle there had fallen back, and had printed like a rejection candle, a pin bar candle there, that might have been a great opportunity to continue. All right, continue the short selling the euro, because that's what's been the dominant trend there. Basically, that's what we've seen most of the part. Pound against dollar, I was looking at this, was a bit frustrated about this myself. So last week, what we had was, price had been in a downtrend there. Okay, but we can see there, when we were beneath the 50 period moving average, we drifted our way back up to it. We bounced off it, and here is where I was looking to be short. But the reason I wasn't short, normally that would be my kind of perfect chance to sort of sell at a rally in a downtrend, a bounce off a moving average with a nice inside bar, pin bar. Now, the kind of beautiful trade for me. But this was Wednesday, so it was Wednesday morning. We had CPI data, okay, which sterling pumped from. And then on the Thursday lunchtime, we had the Bank of England meeting minutes. So, as I said, I don't like to trade in front of big news, really big news, the overnights and stuff. And so yes, the market actually moved beautifully lower. Okay, and then people might say, well, you should have, Paul, but woulda, shoulda, coulda. All right, okay. This was just a case of where the news was kind of understood and knew how it's played out. But actually, the important thing is setups like these, when they happen, because they will happen again, right? That's the important thing. Okay, just being able to see a pullback, a bounce off the 50, and then you can see as it moved nicely, but not in front of the major news here and stuff. And so, we've started this week that dollar sell-off is basically we're getting sterling strength. Okay, but it's more a reflection of, in fact, if we look across all of these here, okay, and this is always a good tool to use as a trader. Bosh, that is that's dollar weakness, and so basically Aussie dollars rising, Kiwi dollars rising, Euro dollars rising, pound dollars rising. Okay, dollar CAD, okay, is falling. We've had a bit of dollar yen in terms of the bit of intervention there, but hopefully you can see, okay, dollar Swiss franc has been strong as well. Is that even if you understand the 4-hour dollar index chart, that you can see how they kind of correlate with the other majors, and even if you only just traded the 4-hour dollar majors, okay, you can see there, hopefully that you can get an idea that when they all operate and trend well together, that in itself can be a real bonus, can be a real benefit to you as a trader, those particular correlations. So if you are starting out and you're new, as I said, create yourself a dollar profile here. As I said, I've got here dollar index, and I've got here Aussie dollar, euro dollar, pound dollar, dollar Swiss, dollar yen, dollar CAD, and Kiwi dollar. And as I said, even just being able to look at that in the 4-hour charts, you will get an idea of where the strength is from the dollar, and then you don't want to fight it. Where you see places like this where it's all moving together in correlation, that can be a very, very nice way to operate as such a trader. So there's a little take that little nugget away. Okay. I've got a couple of minutes. Let's just have a quick look at how the indices opened. I mean, normally, as I say, is that I normally wait for these. I think this is yeah. For some reason, that has kind of messed itself up there. Let's go for which one is a good one for us? Intraday indices. Let's have a look at that. See, is that not? I was doing some work on it, and it basically at the weekend, and I managed to mess up that on here one, which was not the smartest move I've ever made. Well done, Paul. So afternoon session. Let's see if we've got. Yeah, this will do us. Boom. So you can see the this is what I've got here. It's just some of the indices. American indices here as we entered. There is the Dow, there's the Russell, there's the Nasdaq, there's the S&P 500, there is the dollar index, which we've just looked at. That's the VIX. I've also got oil there. Okay, so no surprise, VIX is going down, and we're seeing you can see there all of them basically how we've started this week. So that week pretty good. That's pretty bullish there, isn't it? That's a pretty bullish. That's a pretty bullish environment we've got there. Okay, let's just have a quick look and see what's going on there. Okay, let's just take a quick look at that. What I particularly like is coming down here. This is Nasdaq coming into the kind of previous week's lows. You can see how that has just basically bought its well off there. So the 5-minute chart there, just looking at, I'd be waiting for us to get above that 50, above the 50. Okay, would be very bullish to me. Okay, yeah, can I get above there? It's the 1-minute chart. That's what I'll be looking to see if we can get above there, and that would be bullish, which would basically carry on with what the rest of them are doing. You can see that's quite something. And it's kind of interesting, as you can see, dollar index is selling off, and the dollar selling off, and indices are going higher. Okay, that's very often seeing the same thing. I bet if we looked at dollar bonds, treasuries, and stuff, we'd probably see an interesting conversation there. So Dow, let's see how Dow has been doing there. Let's look at a 1-minute chart. Yeah, so the 1-minute chart, you can see, we kind of, this is why I normally suggest this green box is basically, the start of the US session, have it on there. And this was bang, yeah. As I say, the first 15 to 20 minutes, especially on a Monday, as an intraday trader, I normally tell people just to ignore, because it basically is just doing its thing. And then you can see that's putting a pretty strong spurt there for the last 10 minutes or so. Whether that can actually basically, whether that can achieve that or carry it on, we shall see. All right, I'll be watching that. I'll be watching to see if that fades there. So yeah, unfortunately, we have run out of time, ladies and gentlemen. As I say, time flies when you're having fun. We did cover quite a bit there on the 4-hour charts, and as I said, it'll be the start. We'll do some more sessions on kind of specific nuanced element of it, but I hope you found that useful. I hope that's given you a little bit of help into terms of how really good 4-hour charts can be, and actually how you can operate. And yeah, I wish you every success with your trading this week. I hope you have a great week. I hope you'll join us next week to look at trading continuations. And I will speak to you soon. Thanks very much, everybody. Cheers.